We have a very important voice joining in. Mr. Nirmal Jain of India Infoline, Chairman of India Infoline, joins in with his take on the budget as well as a run through on their numbers. Mr. Jain, it's great to have you on the show. There's so much to talk to you about, the markets, the budget reaction, and then, of course, your earnings. But I'll start off with the markets first because we're seeing, a fair amount of sell-off in the large caps, as also, a very, very intense bout of selling and unwinding pressure in the mid caps. Do you think this has got to do with just near-term and immediate adjustment to reality of there being an LTCG now?
I think LTCG is just one of the regions, and to my mind, it can. It's not the most important or significant region actually. What market is worried about? Market is trying to calculate how much will this MSP calculations, which are based on 50% plus, cost of production plus 50%, will result in fiscal deficit and therefore incremental borrowing. So if you really look at bond market, then yields are up very sharply, and that is what has spooked the market also. On top of that, if you notice, US market yield also has gone up. So I think there are some global factors, and then there are some mid-cap companies that got into sort of very speculative or governance issues. So all these factors are combined, and also market was at a high altitude in terms of valuation, so it needed a good reason to correct. So I think all those factors are playing out. In my opinion, I don't think LTCG is the only reason to blame. And LTCG again, my view is that 10% LTCG, a tax on long-term capital gain by itself, is not so bad. But what we should not forget is when STT was introduced, that was introduced in lieu of lower taxes on capital gains. So there's problem with our Indian tax system, that what we do is that finance ministers keep introducing more and more taxes. So instead of making it simpler, we make it complex. So when you look at securities transactions, there's STT, which is also a sort of a direct tax, and now we have capital gains tax also. So if you want to have long-term capital gains tax, you should remove STT. Similarly, on dividend also, you have a dividend distribution tax, and there's another 10% tax on recipients of dividend. See, I think in principle we don't have any. We are all okay that rich or people are making more money be taxed more. But we shouldn't make it very complicated just to make it optically look better. Actually, it looks worse.
Right. Mr. Jain, my only follow-up then is, you speak to some of the most influential global investors watching India. They're on your speed dial, so to speak. Is the feedback from them one of saying, you know what, we thought India was very, very tax efficient, was very, very, a comfortable place to invest in, very tax friendly, so to speak, but our sentiment is changing and maybe this would call for some reallocation out of India?
No, if you look at things holistically, then there are quite a few favorable changes that have been done by the government. And there are quite a few provisions in the budget which try to make things simpler and move towards ease of doing business. There's no doubt about it. At the same time, agriculture and rural sector needed a lot of focus, because if you look at nominal income of agriculture sector, then in last 2-3 years it hasn't gone up. Actually, it might have declined a little bit, or it has been flat at best. So obviously that's a situation which no government or no policy maker would, regardless of whether elections are imminent or not, would let it go unheeded. So I think that needed some action that government has done. There's a lot of allocation on infrastructure. So that way, I personally don't find anything wrong in the budget. The government also has to raise revenue. So capital gains was one of those avenues, and at the same time they try to increase allocation for agriculture, rural sector, infrastructure. So these are all things in right direction. So many times what happens, the market reaction is combination of several factors. So we shouldn't ascribe everything to say budgetary changes, but of course when things are a little fragile, any such move can sort of aggravate the situation. So that's what has happened. But if you look at medium to long term, I'm personally not very bearish on the market. There was some froth in mid cap or some stock, so that needed a good reason to get out of it. So that's happening. And once that is clear, I think market fundamentally, the underlying tone in Indian stock market, I think still is bullish.
About your demerger, why exactly are you looking at demerging? I mean, are you trying to send a message across that investors should have an option to choose between your insurance business, NBFC business, and your asset and your third business, which is the business of asset management and also money management?
So our demerger will result in 3 companies, and so this is IIFL Wealth, IIFL Finance, and IIFL Securities. So IIFL Wealth and Asset Management caters to HNI customers, and it also has a subsidiary financing company which takes care of financing requirement of HNI customers. So if you look at 3 businesses, then the customer segments are very different, because IIFL Finance caters to people who want to borrow and retail customers, retail borrowers, and IIFL Securities in investment requirement of retail and mass affluent. So customer segments are different, the management teams are different, the risk profile and growth trajectory is different, and gone are the days when investors or regulators would allow, or actually now more and more the trend is that the conglomerate with convoluted ownership, and where you have a beneficial stake maybe much lower, but you try to control through intermingling shareholding. I mean, that's not a good structure from governance point of view. And if you have a clean and clear corporate structure, it's good from regulatory point of view, it's good from governance, it's good from incentivizing the management team, because they get stock options of the companies or the businesses that they're managing, and it can take decisions which are faster, quicker in an environment which is changing very rapidly. As far as IIFL is concerned, last 23 years, we have grown all these businesses. Now they have got the critical mass. They come, now they are of size that they can be independent. So we thought that this is the right time to make them independent.
Investors who are investors in IIFL Holding, are your P investors who've invested in IIFL Holding happy with this ownership?
Yeah, so Fairfax is a large investor in the IIFL Holding, and other than Fairfax promoters, which is me and Venkat, we are the key shareholders. So we are quite happy with this. We also want although all these businesses can be called financial services, but when you look at the nature of the business, the customer profile, the kind of people and culture that you need, they are very different. And but we wanted to wait till all of them get some critical mass and size, and so that they can be independently listed, have reasonable liquidity and profitability, which is required for a listed company. So all of us are on the same page. So this, all the investors, promoters have taken this decision with consensus.
Nirmal, some would argue that the real meaty part of your business is the wealth management business, and I'm keen to know more about that business. Where do you think that business is headed at a time when financial inclusion is strong? You are managing more than 1 lakh crore now. The spread which you're enjoying in that business is also very superior.
So that's a perception that you have, and IIFL Wealth has grown faster than the other 2 businesses in the last 5 years. But if you look at IIFL Finance and IIFL Securities, they also have grown at something like 30% or 35%, which is not a bad growth. So if you look at IIFL Finance or NBFC business, then this is a large industry and we are part of that. And most of the well-managed NBFCs have done well in terms of growth, profitability, as well as their performance in the stock market. So there's no reason to feel bearish on IIFL Finance or think that their business is not as good. Coming to IIFL Securities, even that business is catering to mass affluent. And I think that going forward, that business will become a lot more stable than, say, what it was in the last 10 years. And the primary reason is that stock market business used to be a lot more volatile. Of course, there are days like today that's volatile, and I'll talk about it a little bit more. But because when we are dependent on, say, foreign money, the markets used to move 5% down on an event like this. But today we are seeing that the event like this will have a market movement of 1.5% kind of a thing. And also that business caters to mutual fund distribution for retail customers and the mass affluent. That again is growing very rapidly. So I think all 3 businesses have tremendous potential and growth potential going forward. Wealth has grown very rapidly over last 5 years. Even that should grow rapidly. But I think the other two businesses also have a very, very bright outlook.
Right, Nirmal, good luck. Thank you for joining us, and I certainly hope to see much more of you going forward.
Thank you
and
so much.
our coffee is overdue, so next time I'm in Mumbai. I'm in Delhi right now. You'll be surprised. Yes, I'm in Delhi, not outside our office.
I look forward to.
I look forward to meeting you. All right.